Good morning. I'm Rashad Salamat.
And I'm Brian Curtis. Here are the stories we're following today.
All right, we are looking now at Vietnam as it formally upgraded ties with the U.S. on Sunday, shifting the relationship to the highest level of comprehensive strategic partnership. President Biden said the U.S. had an enormous economic opportunity with Vietnam, making the comments during his first visit to the country. Now, this does come as the U.S. seeks to make deeper inroads in the APAC region by offering nations an alternative superpower to China. Speaking in Hanoi, Biden denied the United States is trying to contain China.
I just want to make sure we have a relationship with China that is on the up and up, squared away. Everybody knows what it's all about. And one of the ways you do that is you make sure that we are talking about the same things. And I think that one of the things we've done, I've tried to do, and I've talked with a number of our staff about this for the last, 6 months, is we have an opportunity to strengthen alliances around the world to maintain stability.
Biden also told reporters that China's real estate industry is facing problems, saying that President Xi Jinping's plans for the Chinese economy are not working.
Meantime, sources say that Vietnam Airlines is entering an initial agreement to buy about 50 Boeing 737 MAX jets. The deal could have a list price value of about $10 billion. The actual amount after discounts is unknown. In the deal, Vietnam's money-losing national carrier would replace more than 40 older generation Airbus A321 planes. Now, this order is seen as something of a breakthrough for Boeing, as Vietnam Airlines is currently an all-Airbus single-aisle jet operator. We had reported back in June that the airline was weighing an order for as many as 50 Airbus A321 Neo jets, and we haven't been able to get in touch with Vietnam Airlines for details on this, whether or not that means that early report is no more.
Okay, let's move now to the sidelines of the Group of 20 meeting, where Italy's Prime Minister Giorgia Meloni told China that Italy is planning to withdraw from the Belt and Road Initiative. Bloomberg's Joanna Wong has more from Hong Kong.
Sources say Meloni spoke to Chinese President Xi Jinping about Italy's withdrawal plan. Meloni also said she spoke to Chinese Premier Li Qiang about the initiative, but a decision had yet to be made. She's been taking her time before deciding how to communicate her government's decision to exit from the plan. Meloni fears trade retaliation after China's ambassador to Italy warned of possible consequences. Meloni said the issue is sensitive and she'll visit China in the coming months. In Hong Kong, I'm Joanne Wong, Bloomberg Radio.
In other news, Alibaba's former chief, Daniel Zhang, has decided to quit just months after agreeing to lead the company's cloud division. Bloomberg's Bonnie Au has the story from Hong Kong.
Zhang has taken on the role after giving up his dual duties as CEO and chairman of the group. The latest move adds another layer of uncertainty to Alibaba as it navigates a complicated breakup. Alibaba has said it wants to operate as a true investment holding company. That means individual units can seek funding and list separately. With Zhang's departure, Eddie Wu will serve as acting chairman and CEO of the cloud business. As to Zhang's future, he'll now steer a $1 billion investment fund on Alibaba's behalf. In Hong Kong, I'm Bonnie Au, Bloomberg Radio.
We've got Treasury Secretary Janet Yellen saying she's increasingly confident that the United States will be able to contain inflation without major damage to the job market, also hailing recent economic data showing a steady slowdown in inflation and a fresh influx of job seekers. Now, traders will next have their eyes on a report coming out this week, which will be telling us a bit more about U.S. prices, i.e. U.S. inflation. Bloomberg's Denise Pellegrini has a look at what to expect.
Higher energy prices are expected to push up the headline inflation number for August, with the month-on-month inflation rate expected to rise to 0.6% and the annual rate to quicken to 3.6% from 3.2%. Take out food and energy, though, and Bloomberg Economics says core CPI likely continued at only a 0.2% rate in August, same as last month's rate, making it the longest stretch of subdued readings since early 2021. Now, year on year, that core rate is expected to fall to a 4.3% rate, down from 4.7%. And Bloomberg Economics also says with the job market cooling, and student loan repayments resuming, retrenching demand will continue exerting downward pressure on inflation. And the Fed, according to Bloomberg Economics, is probably already done hiking for the year.
Bloomberg's Denise Pellegrini with that report. Sorry, just here, 8 minutes past the hour. It's time now for global news. G20 leaders reaching compromise wording in their final statement on Ukraine that gives both sides an opening to claim a diplomatic victory. Ed Baxter has global news in the 960 newsroom in San Francisco. Ed?
Yeah, exactly right, Brian. G20 leaders reaching the compromise. U.S. allies had wanted stronger language condemning Russia for the invasion. That did not happen. And Russia can claim victory there because the U.S. and allies also say the statement contains strong language regarding the invasion. Now, U.S. Secretary of State Antony Blinken commenting.
The leaders here all stood up very clearly, including in the statement, for Ukraine's sovereignty, for its territorial integrity. I think the statement's a very strong one.
But, of course, there are detractors. Former UN ambassador, Republican presidential candidate Nikki Haley on CNN says, weak.
It was a win for Russia and China. They're celebrating today. I mean, what we should have had was Biden should have really pushed hard to acknowledge what he acknowledged a year ago, that Russia invaded a pro-American, freedom-loving country.
As for President Biden, focused on the Indo-Pacific.
Having India cooperate much more with the United States, be closer to the United States, Vietnam being closer with the United States, it's not about containing China. It's about having a stable base in the Indo-Pacific.
And global warming, Biden saying bigger than nuclear attack.
There was a lot of lying dog-faced pony soldiers out there about global warming, but not anymore. All of a sudden, we all realize it's a problem. And there's nothing like seeing the light.
Biden also saying he feels China is weakened enough that it won't be in a position to invade Taiwan. And U.S. Vice President Kamala Harris says a policy to cement relationships in the Indo-Pacific.
For example, when I was in Tokyo last year, meeting with CEOs there about what we are doing to coordinate around the semiconductor industry, what we are doing with South Korea to the same extent, ensuring that with our allies we are strengthening the relationship around our common goals.
Now, Harris on CBS, as heard here on Bloomberg, says those relationships are very important. COVID cases on the rise in the U.S., and Dr. Anthony Fauci back on ABC, as heard on Bloomberg, says it will increase.
We're having an uptick in cases, which is being reflected by an uptick about 17% or more in hospitalizations. There's no doubt that that is going on, and since we're now at the end of the summer, it is likely that that will increase as we get into the fall.
But says immunity is still pretty high overall.
People who've been vaccinated, boosted, people who've been infected, the chances of this being an overwhelming rush of cases and hospitalizations is probably low.
Fauci says boosters will be available hopefully before the end of September and says it is important to get boosted. He also says despite all the debate and crying about masks, they still do deliver a line of added protection. Global News powered by more than 2,700 journalists and analysts in over 120 countries in San Francisco. I'm Ed Baxter, and this is Bloomberg.
This is Bloomberg Daybreak Asia. I'm Brian Curtis, along with Rashad Salamat, and our guest is Phil Palumbo, CEO and CIO of Palumbo Wealth. Phil, as we get started this week, you just heard the news flow there from both our look at business stories and also Ed's take on the latest global news. What do you think will dominate the minds of investors as we kick off this week?
I think the most important thing is investors are realizing that China is weakening as an economy. And we say that when you look at the property devaluation that we're seeing, the trade war with the U.S., the tensions with the U.S., which is severe, supply chain changes now. A lot of companies now are looking to diversify out, especially after COVID. The consumption story in China is very weak relative to what they really need to get to on a consumer basis. They're at 38%. Is the consumer relative to GDP. In order to get that up, they have to put money into the pockets of consumers. So I think investors are recognizing that the infrastructure build-out that they did was overdone. They're not going to be able to do that this time around to really jumpstart their economy. And because of that, I think investors, are going to move away from China and move in places like India. India is a much more attractive country to invest in than China today.
Phil, okay, sure, when we look at China itself, we'll move to India a bit later on, but the thing is that household savings are actually up quite considerably since 2021. The point being, with what's happened with property, it's taken away one of the biggest growth engines. And so what the country is doing is arguably having a structural shift. The thing is, what's the new engine of growth going to be? And would that become investable? And that would perhaps be where you need to be.
In China, I just think that first, investors have to have confidence that they can get over this real estate property issue that they're having, which is very substantial. When you look at the quantity of debt that's consumed, that they have on many of the properties in China, I just think that investors are going to be skittish to deploy capital there. And until that's resolved, until we see Chinese consumers spending like they should be and savings not going up, as you just talked about just now, I think there's a lot that we have to really think about before you see a lot of capital flowing into China. And you're seeing money leaving China and going into Japan, and other countries. So I think there's a lot still needs to be done and reviewed before investors take China serious again.
A moment ago, you said that India looked the better option at the moment. Why?
So India has the first and most important thing for a country to go from developing into developed. It all comes down to leadership and good policy making. And Prime Minister Modi has done a phenomenal job since he's been in office in attracting foreign investment into his country. The demographics in India is much more attractive than China. There are 1.4 billion people, and the average age is 29 years old. The average per capita income is only $2,400. So there's plenty of room there to grow, and I would suggest that India is the new China. So what China was 30, 40 years ago, India is today. And Modi is going all around the world. He's doing a great job politically. Just at the G20 meeting, they put together this rail and port deals with the Saudis, the U.S., and the EU, which is going to be tremendous for their country. So he's really doing a great job that's going to attract money into their country. Yeah.
Phil, I have to follow up on that because obviously Modi is known as a nationalist, not so much as a globalist. Are you saying that he can wear both hats at the same time?
I think he is wearing both hats at the same time. I mean, he is a nationalist, but he's definitely, creating great, strong relations with many leaders around the country, and you're seeing direct investments into the country. You're seeing direct investments in infrastructure and renewable energy. And so you're seeing a lot of things that are going on within India and his policies that are improving the growth. And you could see it in the growth of GDP. You could see it in where the market's trading relative to other emerging market countries, right? It's trading at a higher valuation because investors are recognizing that investing in India is a good investment in the long term.
The thing is, Phil, it's very expensive. That's what puts a lot of people off here. And is that huge premium that India has enjoyed, if you can argue that, something which is likely to put people off?
It sure is, right? So a couple of things we have to think about. Number one is the strong dollar relative to other currencies, right? So when you look at the performance of the Indian market versus the S&P 500, there is underperformance there. So there are things that have to unravel before you can make a direct investment in India, from a public stock market standpoint. So I don't think you need to necessarily jump in today because of overvaluation, but I do think you're going to get opportunities where the Indian stock market will retrace because of some currency risk perhaps, or higher interest rates all around the world. That's putting pressure on emerging markets. So that pressure is going to create a cheaper stock market overall for India, and that's going to be the opportunity for investors to jump in.
And you mentioned Japan. They've had a good run there, too. Obviously, the Nikkei, one of the better performing major benchmarks in Asia. A lot of investors cite some changes in the structural nature of corporate culture. Are you in that camp?
Absolutely. So the corporate culture, the three major things that's attracting investors is their increase in buybacks, dividends, and selling off non-core assets. Those are three key areas that are attracting investors into their market that I think is sustainable. And you're seeing supply chain shifts into Japan as well. You're starting to see real rates rise for the first time in a very, very long time. Yield curve control, I think they're going to start to remove that or start to subside on that, and you start to see rates move up higher, which will attract capital to their market overall. So these are the benefits that you're seeing within Japan, which is a game changer, which we haven't seen in a very long time.
This is Bloomberg Daybreak Asia, your morning brief on the stories making news from Hong Kong to Singapore and Wall Street.
Look for us on your podcast feed every day on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each day on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington,
Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, Sirius XM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Brian Curtis.
And I'm Rashad Salamat. Join us again tomorrow for all the news you need to start your day right here on Bloomberg Daybreak Asia.